Buoyed by strong economic growth, Singapore's construction demand grew 14% last year to 25.7 billion Singapore dollars. For 2011, the BCA expects 12 to 15 billion Singapore dollars worth of public sector contracts, accounting for 55% of overall construction demand. The Ministry of National Development, or MND, says it will continue to support public sector construction this year.
For example, HDB intends to launch up to 22,000 new flats under its BTO program. Apart from housing, there will also be contracts for upgrading and development of new educational as well as healthcare facilities, and of course the infrastructure projects, the big infrastructure projects, MRT projects such as the downtown DTL3, Downtown Line Stage 3, and various major roadworks.
BCA says the private sector this year may be more cautious about construction, especially when it comes to residential projects. Private sector construction contracts this year may total 10 to 13 billion Singapore dollars, down from 17.4 billion Singapore dollars in 2010. Meanwhile, construction costs are on their way up, partly because of the floods in Queensland. Prices of construction materials such as steel have risen 10% in the past month.
There is no doubt that there are some factors that are causing certain raw materials like steel, for example, to increase in price. But the general consensus was that these increases will be factored into the construction costs. But overall construction costs, there are other factors as well. So the industry will probably take it in its stride. Specifically, of course, for private sector.
Contractors say higher steel prices are due to a shortage of coking coal, a raw material used in steel production. The listing of government bonds on the Singapore Exchange will help boost transparency, giving investors better access to information on pricing. And analysts say this can help boost liquidity for the bonds.
But they also note that this process may take time. They were responding to the announcement earlier this week that Singapore government bonds will be listed on the stock exchange by mid-2011.
Analysts say the listing of Singapore's government bonds on the SGX could pave the way to better educated investors in bond trading. This will in turn boost trading and raise liquidity in the bond market in the long run.
It's making the government bonds more visible to the average investor, and I think through making the bonds more visible, that increases the education, it increases the knowledge that investors have, and therefore increases the confidence they can have in investing in these instruments.
But this process may take some time. At the moment, corporate and government bonds are in demand, mainly by institutional investors, according to analysts. Trading volumes for SGX-listed bonds remain thin, as most investors opt to hold on to their bonds till maturity. The current low interest rate environment and lower yields are also making bonds quite unattractive. As such, some analysts don't expect a significant take-up rate for the Singapore government bonds when they make their debut on the SGX middle of this year.
The yield on SGS bonds is not entirely fantastic at the moment. Even the 20-over-year one only gives you slightly over 3% in terms of yield. And that one assumes you hold it 20 over years to maturity, which is a massive time to hold.
Although it may take a while for retail participation to pick up in the bonds market, analysts say having them publicly traded may be good for the overall market. Having a AAA-rated government bond traded on the SGX will give the bond market more depth and encourage other companies to list their own bonds.